We're joined by Shaunak Amin, who is the Managing Director of Alembic Pharma. Mr. Amin, thank you so much for taking the time. Have we looked at the key elements that have led to that performance? What, according to you, stood out in the quarter gone by?
I think market conditions have not been the best for us, both in the India business as well as some pricing pressure on the API side as well as in the US side. I think the positives that we've seen is I think we've been able to build volumes in the US, which has led to a decent growth despite the erosion in margins. Sorry, the pricing pressure in the US. I think in terms of India and the API segment, I think it's a matter of new products kicking in for the API side to build up some growth numbers. And I think on Q3, it's a combination predominantly of lack of a market, or rather market headwinds, in the acute side of our business, along with some amount of internal operational challenges that have led to these numbers. I think the internal operation challenges in Q4 should be addressed, and the sense we're getting is the market headwinds are easing up a touch on the India business side also.
I'll come back to that. I'll circle back to that. But on the first point that you made about the generics doing well and offsetting some of that impact, I see that the US generics has grown about 10%, 521 crore. Now, very substantial. What is the outlook there? Does that keep growing?
Yeah, so like I said, I think we've been able to offset the pricing pressure through volume increase. So I think we expect this trends to continue.
To what extent, though, Mr. Amin? Do you see that becoming a more meaningful part of the overall revenue mix? And how do we see that progressing heading into the next year as well?
It's hard to, we don't give forward guidances, so it's hard for me to comment at this point in time. But I think directionally, we're in the right trajectory.
Right. Mr. Amin, Mahima also joining in. You mentioned pricing pressure, and you said to some extent volumes will be able to kind of offset the pricing pressure. But do you think that the companies are now expected to live with this kind of pressure, or do you see improvement going ahead from a macro perspective?
Yeah, so I think the point I made was we had pricing pressures in Q3, which we offset through a big volume increase. That's just the nature of the beast. I think the US markets is going to be under pressure on pricing consistently. So that I don't think that scenario will change at any point in the future.
Ms. Amin, last quarter there were some concerns with respect to the API customers. Has there been any progress there? Has that been resolved? What's the status there?
No, so I think the API business, I think, like you said, it should be, it's some amount of price erosion, as well as I think new products kicking in. I think it should pick up in the coming quarters.
All right. And in terms of the automation, there has been enhanced automation and there has been AI transition also, which has kind of partly impacted the growth as well in Q3. Do you expect that to continue going on in Q4 and ahead in FY26 as well?
No, so I think that's a critical lever for us going forward to help drive growth. I think it's a matter of getting adoption across a large number of people and transitioning into that. That's taking time. I think we're quite confident operationally we should be past these issues, and actually some of these internal initiatives will help kick in growth going forward.
Okay. Last question, Q4 better than Q3 in your opinion in all the key operating metrics that you're tracking?
As of so far in Jan, yes.
Fantastic. Mr. Amin, thanks so much for joining in. Pleasure speaking with you as always.
Thank you. Thanks a lot.
Thanks.